Hello and welcome to the Motilal Oswal studio. You're watching Your Trades on ET Now with me, Shreyanshi Singh and Snehisha. And over the next half an hour, we'll get you a roundup of the day gone by in trade. And let's begin with that then. It was a tepid day in trade coming in. As far as the Nifty is concerned, of course, that shade of red was a tad bit darker when it comes to the mid-cap index. That's the one that was underperforming the benchmarks. When you take a look at the list of losers, then it was the realty pack that was leading the list of laggards, then consumption following suit, as well as the PSE index also then. And when you take a look at the FMCG index, that's also the one that was on the back foot. You had a host of counters. Firstly, you had Trent that was down 8% plus. That is the kind of move that you saw coming in on Trent there on your screens as well. Now, of course, the third quarter did meet estimates as far as the third quarter fine print earnings fine print then is concerned, but there were a host of counters from that entire pack that were down anywhere between 0.5% to 2.5% as far as Titan and some of those other counters are also concerned. When you take a look at the sectoral picture, then you do have auto as well as energy that were also on the back foot, and on the flip side then there was IT and pharma holding on to a tinge of green. From within the IT pack, you did have Infosys, HCL Tech, all of them holding on to a shade of green at the end of the day as well. And when you take a look at some of the other counters coming in from the pharma pack, you had Cipla through the day that was holding on to a tinge of green, 2.5% thereabout uptick coming in as far as Cipla is concerned. Even Dr. Reddy's Labs holding on to some little bit show of strength coming in. So that was largely the kind of picture that we saw emerging in as far as some of those stocks were concerned. But when you take a look at SBI, that's the one where you saw a healthy quarter coming in, asset quality of course improving. But when you take a look at the stock, went home with cuts of about 1.8% in trade, and that's the kind of handover that you had for some of those banks. Now some of those other banks of course did the heavy lifting a little bit. Kotak Mahindra Bank, ICICI Bank, HDFC Bank also went home with a tinge of green at the end of the trading day, Snehi. But lots to look at in terms of tomorrow then.
Tomorrow, well, yes, but before we reach tomorrow, lots to watch out for and highlight upon and touch upon the day that we've had today, because Nifty fell as low as 23,550 thereabouts. We've managed to close barely 3 or 4 points above the 23,600 mark, but nonetheless, it's been a 210% recovery from the day's highest point, day's lowest point rather, but a 170 point cut from the day's highest point. So that's where we've ended up on the, when it comes to Nifty. But let's also take a look at some other stocks that were in focus today. It was a healthy quarter 3 for SBI. Asset quality improved. That stock did very well in today's trading session. However, another earnings candidate, Nifty 50 major, Trent, came out with its numbers during market hours as well. That stock was beaten away in today's trading session, although the numbers met estimates. So we're assuming that the sheen pressure on that stock is still continuing, because that stock closed with cuts of anywhere between 8.5%. There you have Trent. 8.2% lower is where Trent has closed for the day. And the stock slumped, and along with that, the list of losers, Swiggy was also a part of that list, because the net loss was much wider on both the net loss and EBITDA loss were rather much wider than our expectations, and also on the sequential basis. That stock was punished by investors today, and 7% cut coming in on Swiggy as well. Important events to watch out for tomorrow. You have M&M earnings, and a decent set of numbers are expected from M&M tomorrow. That's the only Nifty 50 company to come out with its numbers. However, the biggest event tomorrow on the street, and all eyes will be on the MPC meeting, because the RBI is finally expected to undertake a 25 bips rate cut and set to end the longest rate pause. Remember, for almost 5 years, the MPC has kept the rate unchanged at 6.5%. So maybe we could see a 25 bips cut coming in tomorrow. That's the setup for tomorrow, and also a roundabout of the day that we've had today. But let's also bring on board Kunal Bothra to understand a little bit more about the kind of session we've seen today and where we could be headed tomorrow. Now, Kunal, today was expiry. We were, of course, penciling in some volatility, but to this extent that we've slipped below the 23,600 mark, managed to close right around that mark, but nonetheless, we did revisit the 23,550 levels. Is that where you are seeing some support getting built, and what are your levels on the upside that you're expecting to watch?
Well, good afternoon, Stay. So, after a 1,000-point rally, a trimming of 150 points on the index would just be a par for course for the indices, and especially given the point where that we've come out of a zone of a major selling, a major sell-off or major volatility for the markets in the last 2-3 months. I look at it this way, that the stance from the FIs are changing definitely over the last few days. We've seen less incremental sell-off for from the FIs in the cash segment. we've seen unwinding of short positions on the index futures, and then built up of long positions on the index futures. And I think that in a nutshell indicates that we're looking at a change of stance, change of scenario for the markets over the very near term. Now, yes, these catalysts in terms of events, whether it was budget, whether it is the aspect of Trump tariff, and now with the RBI policy, that could probably keep the markets a tad bit more volatile. But then when we look at this as a trend emerging, I would probably expect that 23,500 should broadly be held on to as a support or as pivot support for the index. I would expect that the Nifty should head back towards 23,800, 24,000 mark potentially over the next 1 week.
All right, and Kunal, I also wanted to ask you about consumption, and I'm very tempted to ask you about Trent as well. But when you take a look at the entire consumption story, of course, there was that tax cut fillip coming in as far as the budget was concerned, and now that we're seeing some of those cuts to the tune of about 2% coming in on the consumption index, what kind of growth roadmap do you see when it comes to this particular index?
See, again, I think budget as an event, to be played out into these stocks was just an event kind of a trade. Yes, that event shelf life was maybe a couple of days for these stocks, but then I think post that I would probably expect that these stocks would come back into the normal course of the trend which we've seen in the last 3-4 months. And look at how the FMCG stocks have been beaten down in the last 4 months. We've seen on an average a 25% correction for the index and more than 30% odd correction for individual stocks or many of the stocks from the FMCG pack. So that itself indicates that we are into a series of downward trend. Now, in the midst of a downtrend, there are bound to be points where these stocks go into a V-shaped recovery, rallies, and then get into a sell-off mode. I would believe that FMCG stocks as an overall basket should underperform for the next 3 to 6 months at least.
Okay, not sounding very bullish on when it comes to the FMCG stocks. But Kunal, another sector that's been doing well recently, it's the PSU banks and financials. I'm assuming that the picks you have for our viewers belong to these packs.
Well, absolutely, yes. And I'm sticking to the financial theme as such because that's the performing sector. And it makes a lot of sense to try and pick stocks from the performing or the relatively strong sectors. The first one is one Kotak Bank. That stock has been looking absolutely strong, especially post results when the stock had given a 5% plus kind of a gap up move. Would look out for a buy on Kotak Bank with a near-term target just around that 2,000 plus mark and stop loss to be kept at 1880. And the second is a buy on Bajaj Finserv. Now, after a couple of days of a cool off from the 1800, 30, 50 mark for Bajaj Finserv, the stock has come back towards an attractive risk-reward territory at current levels. So look out for a buy with a target of 1850, stop loss at 1750.
All right, and those are Kunal's picks. Thank you so much, Kunal, for joining us and answering all of those questions when it comes to the markets. Let's get you the word from the wise coming in. Then Atul Suri Marathon Trends PMS owns one PSU stock and has in fact exited a few holdings recently as he believes that the turnaround in PSUs might take some more time. Let's go across and listen in to what exactly he then had to say.
PSUs really were something that, which had a beautiful 2.5 year run. I feel that a lot of them have been structurally hurt. They are going to take a lot of time. Let's say railway stocks for that matter.
Railway, defense, shipping.
Yeah, exactly. In defense, 1 or 2 stocks still holding out. That's what I meant. I have one of them. But you'll realize that in the energy space, in the railway space, these stocks have fallen 30-40%.
When you say energy, power.
Power related plays that
PFC,
are there,
REC types.
all those kind of plays that are there, I feel that they will take time.
So if somebody is owning PSU stock, just take a hit and get out.
If you've bought at the top, yes, you will have better opportunity somewhere else. That's all I'm saying. If you sit through it, but you'll have to sit through a lot of pain and underperformance.
Okay.
Now the thing is that if you've bought it earlier, you're in the money, if you can still take something off the table. What I feel that the pullback that is coming, as I said, that market's correct. In the churn, you will always find new sectors and themes emerging.
Okay, on that note, we'll slip into a very short break on this edition of Your Trades and keep it going with all the market discussion and how the market setup was today just on the other side of this break. Hi there, welcome back to Your Trades. We are joining you from the Motilal Oswal studio and let's take a look at what the derivative action has shaped up to be like because of course today was expiry day. Lots has happened when it comes to the FNO front as well. First up, let's talk about start by talking about the index future trend. Now for the February expiry, the month end expiry, Nifty, some short build up being seen over here. Interesting to note is day before yesterday we had a long build up here. Yesterday it was flat and now we're already seeing a short build up. Lots of contrasting action happening just over the course of 3 sessions. So that's very interesting when you see the Nifty. Nifty Bank, however, continues to be in the positive side because mild short covering is what we are still continuing to see on the Nifty. So at least that is looking positive for the markets right now. India VIX 14.18 is where we've managed to close, a slight uptick being seen on India VIX as well. Not much to worry about, just a 0.6% uptick given that we have the MPC policy tomorrow, MPC outcome tomorrow, and you also have the expiry date today. A 0.6% uptick on the India VIX is in fact not bad at all. If you talk about the 13th Feb expiry, let's talk about the call and put writing levels that we've seen. Call writing seen at 23,700 and 23,800, making 23,800 your next upside level to watch out for. And well, on the flip side, when you talk about the support, while we don't have a very clear visibility on that front, given the volatility that we've seen in the market for the 13th February expiry, 23,400 and 23,500 is where we are seeing some put buying happening, effectively making 23,400 the next support level to watch out for. So while some resistance on the upside, but nonetheless, like Kunal mentioned, 23,800 or even 24,000 does not seem too far away, because like he said, it seems to be only 1 week away when we go across and touch those levels on the Nifty. So sounding optimistic, but all eyes are going to be on the policy tomorrow.
Well, absolutely, all eyes are going to be on the policy tomorrow, but as of today, all eyes were definitely on Trent, and you did have that sheen effect, sheen really taking the sheen off Trent, as you can see on your screens as well. 8.2% downtick coming in for that counter. Let's also decode the earnings fine print. In fact, Jinay is standing by with just that.
Well, yes, if you look at the Trent's result, they were a bit of a slight disappointment versus the consensus estimates. If you look at the overall revenue, it was estimated to grow about 40%, and what the company reported was a 37% growth. However, a big miss was on net profit front. The estimated growth by analysts were about 50-51% year-on-year basis, but the company reported a growth of 36%, and operationally as well, the margins slightly contracted in this quarter. Now, overall, if you look at, there was a slight miss. Apart from that, the store updates, the company has 907 stores in Q3 versus 877 in Q2, so there was a slight expansion, and the company also reported that they will be continuing this store expansion going forward as well. Apart from that, if you look at the fashion portfolio, the company had a like-for-like growth of high single digit. This was earlier in double-digit growth, so this was a negative factor for the fashion portfolio. Now, if you also talk about the star business performance, then the overall performance, if you look at the like-for-like growth, that was a double-digit growth. However, if you look at the number of stores of company, that remained at same level of 74 stores in this quarter as well. Now, remember that the company has said that the star business will be the upcoming growth driver for the company going forward. Apart from this, they also told that the pure play D2C business, that remains an interesting opportunity to build a pure play business, and that is why we also saw a slight bit of pressure in Trent today.
Okay, well, that was the down low on what Trent did in terms of its quarterly performance and why that stock was beaten down 8.2% in today's trading session. But while we are talking about stocks that are in focus, let's also bring on board my colleague Rabinder, who's standing by with another basket of stocks that were in focus today on the back of individual news flows or their Q3 earnings. Rabinder, take it away.
Well, Kansai Nerolac has is in focus, where company has announced its Q3 number, and the revenue can be seen at around 1922 crore, which was flat year-on-year basis, and the net profit can be seen at 681 crore as compared to 154 crore year-on-year basis, with an exceptional gain of 630 crore on sale of land parcel, and the EBITDA was declined by 3.5% year-on-year basis. Margin can be seen at around 12.2% year-on-year basis, and board also approved the increase the capacity of auto plant of its company by 4,200 KL per annum, with a total investment of rupees 41 crore. And there are also management commentary coming in when the management say that they are seeing a gradual recovery in the demand, and in automotive growth was better than the market. Moving to next, Narayana Health is also in focus, where company has purchased land at measuring about 3 acres in the southern part of the Bangalore to pursue company business expansion plan. Apart from this, on back of Q3 results, Skipper is also in focus, where revenue saw an uptick almost 42% year-on-year basis at rupees 1135 crore, and the net profit was increased from 20 crore to 36 crore year-on-year basis. If we talk about EBITDA, then EBITDA can be seen at 111 crore with 44% uptick year-on-year basis, and the margin can be seen at 9.8%. And lastly, CCL product is also in focus on back of Q3 result, when the company saw revenue uptick of 14% year-on-year basis at rupees 758 crore, and the net profit increase from 63 net profit was flat 63 crore to 63 crore, and the EBITDA can be seen at uptick of around 13% year-on-year basis.
Alright, then thanks Rabinder for that list of stocks coming in. But let's also take a look at SBI because that's the one to watch out for on the back of its numbers. Now, the numbers, of course, largely met estimates. It was the asset quality that was improving. And you do have CS Setty, who's the chairman of the company, talking about the company's growth expectations going forward, discussing the kind of outlook that they have when it comes to the credit as well as deposits growth. Then let's go across and listen in to what he then had to say.
I think our consistent guidance on the credit cost is 50 basis points. And that I think still holds good. And 3 basis point movement on a 40 lakh crore loan book, I think you have to give some allowance to us. But this is again, our efforts are in terms of even ensuring that how do we maintain this. And we are hopeful that the quality will be maintained. At the system level, there are other challenges in terms of microfinance. Other than that, microfinance, I don't think the book, even in the system level, whether you take home loans, whether you take corporate credit, SME, those books are doing very well. So I don't think the concern on the system level, other than the microfinance, is there. For the current quarter, we, as I mentioned, we still hold that guidance, 14 to 16% credit. And hopefully the 10% growth rate which we registered will continue in the deposits.
Word coming in from the top boss at SBI on the growth outlook going ahead. But on that note, we'll wrap it up on this edition of Your Trades. All eyes, of course, are going to be on the MPC policy tomorrow. But from Shreyansi and me and the team that put this show together, thank you so much for tuning in.